All right, former Federal Reserve Chairman Ben Bernanke warning Wall Street investors about the dangers of ignoring Washington politics and its impact on the markets. Mr. Bernanke says, and I quote, "It always puzzles me that markets are blasé about political risk until the very last moment." Joining me right now, Wall Street Journal Chief Economics Correspondent John Hilsenrath. John, there's something to that. I would say that, what did Chuck Prince say? As long as the music's playing, you keep dancing. And when I think back, you and I both covered the whole financial debacle in '08. Right up until the end, people were a little overly optimistic. What's your sense of things now? Why are they ignoring these potential risks?
I think Bernanke's comment is kind of funny because it comes a day too late, because Wall Street woke up to the dangers of Washington politics yesterday, and we saw this big sell-off. I think the market has been a little complacent. I think the market has been complacent, and there's been this expectation that there's going to be a big corporate tax rate cut coming down the pike this year, and that's built into valuations, and investors are waking up the last couple of days and saying, well, we might not get it. There's a lot of obstacles that stand in the way.
Yeah, and if they don't get it, then it's hard to justify these valuations being where they are.
Well, it's hard to justify it, but I don't want to overstate that, because we can't forget we just got through a pretty good earnings season, 15% earnings growth for the first quarter. Interest rates are still very low. The economy looks like it's growing around 4% in the second quarter. Global growth is picking up. So, I don't think Wall Street is totally asleep to what's going on in Washington. I mean, how could you be? It's in the headlines every day.
Indeed. Everywhere you go. It's all anybody talks about. Quickly, let me just ask you about the Fed in all this, because Bill Gross told me yesterday the Fed may not be able to continue on in its interest rate rising environment given all the other concerns out there. What say you?
I think it's premature to say that. I think, that they're looking at 4.4% unemployment rate. They think that wage pressures are starting to build, inflation pressures could build, and I think their plan is to do 2 more rate increases this year and start winding down their balance sheet. And they're going to need a lot more soft data to move them off that course.
John, good to see you. Thank you so much.
Great to be here.
John Hilsenrath.
Okay, thank you.
All right.